Too many traders and investors on Twitter and other social networks focus too much on what everyone else is doing wrong. The best investors and traders only focus on what they're doing wrong, and more importantly, what they can do to improve. At the end of each year, I like to look back and figure out what it was that I did right and what it was that I did wrong when it comes to investing. For example, I've discovered that I am completely comfortable putting money to work during a crash, adding more and more as the crash sells off more and more. However, when the crash ends and the recovery starts, I find that I always have way more cash on the sidelines than I'd prefer. Optimally, I'd have all that cash put to work when we're at the bottom. That way I could capitalize the most as it takes off. Now, I know that's an unrealistic expectation. There's no way you can time the bottom. And at the recording of this video, my flagship portfolio, the investments in play, is beating the S&P 500, my benchmark, by nearly 7%. That's nearly an entire extra year of gains in 2023 alone. But I've had more than 40% of that portfolio in cash all year. 40%! Investment advisors recommend that you only have a maximum of 10% of your portfolio in cash at any time. If I can beat the S&P 500 by nearly 7% with 40% of my portfolio in cash, imagine how well my strategies could do if I could get that cash hoard down to 20, 10, or even 5% cash. So my resolution for next year is this. I'm going to continue working on being comfortable adding even more than I normally would during sell-offs by buying a larger quantity at each level of support than I have in the past. What are some of your investing and trading resolutions for the new year? Have you identified what you did wrong last year? Let me know in the comments below. Want to learn more? Check out this video about the big fat investing mistake I made in Nike this year.